This video is about making sure we know how to do a bank reconciliation. So take a minute, download the example, try it yourself, and then come back to the video to watch the solution. This is example 8-3. In this example, we will be doing the accounting for a company that I've made up. They're called Julius Greens. It's a landscaping company. And we have received their bank statement. So we've got a fake bank statement here from a made-up bank. TD RBC Bank is the name of Julius Greens, is his bank. And when we look at bank statements in Canada, there's not a specific or formal format for all bank statements in Canada. Every bank does it somewhat differently, but they all have the same common elements or components. So for example, on this made-up statement, we see the name of the bank and their address, and the name of the client, Julius Greens, and their address. We also see the date. In this case, it's in the top right-hand corner, July 31st, and that would indicate that this statement is for the month of July. A lot of bank statements will summarize key information. I've done the same here at the top. Let's take a look at each column. The first, balance forward. This is another way of saying the opening balance. So $17,000 is what we are starting the month with. That means at the end of the previous month, we had $17,000 in the bank according to the bank's records. And they just bring the last month's balance forward. So sometimes you might see this wording, balance forward. Next, we have total deposits. That is exactly what it looks like. That is the total deposits in the month. And then we have total withdrawals. This is everything that has been taken out of the bank account for the month other than the bank's charges to the client. They usually disclose that separately. And we have the charges in the next column, $50 total for the month. And now we have our ending balance. So according to the bank, this is how much cash Julius Greens, the landscaping business, had in their bank account. In other words, their opening balance, add their deposits, subtract withdrawals, and subtract charges equals the ending balance. Moving along this statement, we see next there's a section for deposits. And this shows all of the deposits that the business made or were made to the business's bank account that the bank has a record of. So we can see 3 deposits and their amounts, and then a straight electronic fund transfer. This would have been a direct deposit to the bank account from some other business's bank account. We now have a section for checks, and it looks like Julius Greens had 3 checks that they wrote that cleared the bank. We are showed the date that that clearing of the banking system happened and the amount that would have been withdrawn as a result. We have a separate section here for charges, and it looks like TD RBC has charged their client Julius Greens $50 for the month of July. We have an other section here as well, and it says NSF, so this would imply that Julius Greens had a client or a customer that paid them $900. They tried to make that deposit and it didn't go through, so that customer's bank account did not have $900 in it. I don't see a $900 deposit made up here or any record of that, so it's quite possible that that deposit was attempted in the prior month, and then in this month it was recognized that there was no money in the account and it was withdrawn. We have some more information. This information below is from Julius Greens's accounting records. We can see their records of deposits, 3 of them there, and we can see cash payments. So this is their record of checks that they wrote. Looks like they've recorded 4 checks. We're given some additional data about the business. The EFT deposit was a deposit for a service contract that was to begin in August, so hasn't started as of July. B, the NSF check was in fact received from a customer, Shady Dealings Inc. And then finally, the July 18th deposit was a rare mistake by the bank, as that check should have been deposited to another TD RBC client. The bank has already called to say the error was identified, and the correction will show up on next month's bank statement. So the bank is going to correct it, and we will see that correction in the August statement according to the bank's phone call. Still, we are reconciling for the month of July, which means we need to ensure that we take this difference into account when we do our July bank reconciliation. Requirement 1 is asking us to prepare the July bank reconciliation for Julius Greens. We're going to have to scroll back and forth multiple times in this example. Let's take a moment to look at some of the notes I've provided before the example even begins. So scrolling up, we will see some of the notes here is the bank reconciliation format. And I've provided a format that indicates the legal name of the business, then we name what we're doing and provide the date. Then I provided you with a left-right format, bank information on the left and book or business information on the right. And this format is the one that you will typically see in accounting textbooks, especially at the introductory level. And it's perfectly fine for you to do it this way. I think what we are going to do in today's example is we will just take the book balance information and we will put it beneath the bank balance information to make more of a vertical statement, which is something that you're more likely to see in the working world. So let's take the information that we have and start to do a bank reconciliation. We need to begin with the legal name of the business, Julius Greens. Then we should indicate what it is that this document is called. It's called the bank reconciliation. And we should put down the date. So this is the bank reconciliation as of July 31st for some year. We weren't given the year. We can do the bank first. So we'll say bank balance as of that date. And I will take that number from the bank statement. So scrolling up, if we look at the bank statement, we have the summary ending balance provided to us, $25,955. Excuse me, $995. And we can put that in. To the bank balance, we should be adding deposits in transit. These are any deposits that the business, Julius Greens, has recorded, but the bank has not yet recorded because the bank hasn't gotten them yet. Let's figure out our deposits in transit. A good way to do this is to look at the business's records, and the business indicates that they received 3 deposits during the month of July. July 1st for $500, July 5th for $7,600, and July 31st for $475. Let's see if we can find these deposits on the bank statement. Did they clear? If we look at the deposit section on our bank statement, we can see one deposit on July 3rd for $500. Given that we have no other information, it is likely that this is the same deposit we were looking at earlier. The dates not matching up is not the largest concern. It usually takes a little while for a check to clear the bank. So they probably received a check on July 1st. So someone was in the office on Canada Day to record this in the books over here, July 1st. But their bank probably wasn't open on July 1st. So maybe they took the check to the bank the next day and it did not clear until the 3rd. So we know that that deposit is not in transit. That deposit is completed its journey. July 5th for $7,600 in the books. If we scroll up to the bank and look at the bank's records, we see that deposit did clear the bank. Now we go back to the books and we see July 31st. There's a recorded deposit of $475 in the books. A lot of times, things that happen near the end of the month might not clear the bank in time for the bank statements. And we see that's the case here. We look at all of the deposits and we do not see that July 31st deposit of $475 anywhere in the deposit section of this bank statement. We do see a deposit on July 18th of $1,400, which we have no record of, and an electronic fund transfer, which we did not have a record of. If we read the additional information, we are told that the EFT deposit was for a service contract that's to begin in August. So we know what that is. And item C tells us that the July 18th deposit was a mistake by the bank. So we'll deal with that in just a few moments. Going back to our bank reconciliation, I think we identified that there was only one deposit in transit, and that was this one here. So let's add $475 to the bank balance on this bank reconciliation. Next, we should subtract outstanding checks. Outstanding checks are any checks that were recorded by the business but have not yet cleared or have been not yet recorded by our bank. Let's look at the checks that we have recorded. We have check number 203, 204, 5, and 6 as being recorded, printed, and sent out during the month. Their amounts are listed as follows: $725, $830, $1,750, and $1,200. If we scroll up to the check section of our bank statement, we can see that check 203 has cleared the bank, check 204 has cleared the bank, and check 206 has cleared the bank. What is absent is check 205. Check 205, now indicated near the bottom of your screen, for $1,750, is nowhere to be found on the bank statement. So it has not cleared the bank. Wherever it is, it's somewhere out and standing in the world. This is an outstanding check. So let's subtract outstanding checks. We can subtract number 205, and check number 205 was for 1,000. In fact, why don't we just take the number from here? It was for $1,750. Next, we have to deal with the bank error. The bank error was as follows. The bank recorded a deposit in Julius Green's bank account in error. In other words, the July 18th deposit, let's look at the bank statement. This deposit up here was recorded in error. It shouldn't be there. So the bank put too much into our bank account. They are going to correct this error on their bank statement next month. But for the purposes of making sure that we reconcile the bank balance to our book balance, we know that this is $1,400 too high. We would never have recorded that $1,400 on our books. But it's sitting, that $1,400 is part of our ending bank balance. So unless we reconcile for this difference of $1,400, we would have no hope of reconciling. So because the bank put in $1,400 too much, the correction of that error would be to subtract it. And I will link the cell so when you download the spreadsheet, you can see exactly where the numbers are coming from. We could subtotal all of this, all of these adjustments to our bank balance. And we would get an adjusted bank balance, or you could say an adjusted cash balance of $23,300. $320. We can now turn our attention to the book balance. This is given in the question narrative, so let's go back up and find the number. The book balance for Julius Greens on July 31st was $21,070. There we have it, $21,070. Now we should add anything that we are just discovering, really, so from the bank statement. So the bank statement indicates that there was an EFT deposit, and that hasn't been recorded by Julius Greens yet. And if that's the case, if Julius Greens isn't going online daily to look at their bank account, they wouldn't have that yet. So we should take that number and we would have to add it to our records. We should also subtract the NSF check. That was $900. And we should subtract any bank charges. Because from what we saw, these were not recorded in the books. But they'll need to be. Subtotaling this, $2,250. So our adjusted cash balance will be $23,320. And here we can see that the adjusted cash balance equals for the books and the bank. We've looked at the records of the business, we've thoroughly looked at this bank statement, and it would appear that we've reconciled for all differences. So we can be comfortable that the number reported on the bank balance and the number that we will report once we do a few journal entries in our books will be accurate. Let's turn our attention now to the journal entries. We have to record journal entries to update Julius Greens, their records, for any information that they have not yet recorded that they should have or has happened to their bank account. And that would be the EFT deposit, the NSF check, and the bank charges in this case. Requirement 2 asks us to use July 31st as the date for these transactions. So we can do that. Let's record the EFT deposit first. That would be a debit to cash since cash was received for $3,200. Because this was for a service contract that hasn't even started yet, this is an obligation now for Julius Greens to provide a future good, or perhaps in this case a service. We'll refer to that as unearned revenue. Also on July 31st, we need to deal with this NSF check. The NSF check was the result of a customer who had paid, and it turns out that customer did not have sufficient funds in their bank account to actually pay us. The name of that customer is in the question. The name of the customer is Shady Dealings, Inc. So since we are given the name of the customer, let's use a subledger account to not just put them back into accounts receivable, but to ensure we are very clear on who it is that owes this funds. We have to reinstate the specific account receivable. And that would be $900. The credit for this journal entry would be cash. Finally, we can record the bank charges. This is an expense account, and the credit would be to cash. Recording these entries would bring Julius Greens' cash balance up to date. We've reconciled the bank with the books, and we've recorded the journal entries. That is the end of this example. In our next video, we'll talk about how many businesses deal with small items that require cash payments. So see you then. Thanks for watching.